I'm Shay Russell from mining.com.au, and boy, oh boy, oh boy, have we got some amazing charts to show you. I say we like I had anything to do with it. Data Dan, welcome back. You promised last week, and I know you're going to over deliver. But before we get to the really juicy charts, actually, no, I think they're all really juicy today. I want to start off with, we call it the Australian Securities Exchange, but as you put it, perhaps it's really the mining stock exchange. Data Dan, get that screen share button ready. Where are you taking us?
Okay. Well, I'm taking you on a magical mystery tour, but this is a wonderful example of just how the ASX is really, you know, constructed. And this is not market cap. This is the number of companies. Now, the market cap of Australia's stock exchange is $3.1 trillion, and the biggest contributors to that are, of course, mining and resources, which is just eclipsing the banks and financial sector. So Commonwealth Bank has a market capitalisation of $300 billion, which is absolutely extraordinary. So that's obviously clearly the biggest bank in the Southern Hemisphere that I'm aware of. And I think you'll be starting to test some of the big ones in North America on market cap. So this one here shows the actual numbers of companies listed on the ASX. Now, in terms of the ASX, it's about 1,800 companies, 1,794 if you take out the companies that are suspended or have, and suspended or basically sought a cease in trading. This shows the actual true numbers. Which industry sector dominates the ASX? Now, it is resources by the longest stretch of the imagination. Now, this is quite extraordinary. 563 nanocaps, so that's businesses under $50 million, 104 small cap miners, 17, and then the magic ingredient looking here for the large caps is there's 53 in total. So it goes to show that, even in the large caps, it is still also the dominant provider of, billion-dollar plus businesses. So again, quite extraordinary. Now, Shane, here's the magic number: 41%. 41% of all businesses listed on the ASX are in fact resources related entities. That's not including services companies, resources related entities. Now, if you want to go a little bit further, on the ASX, there's approximately 300 managed funds, ETFs that are listed as vehicles on the ASX. Now, that's essentially, if you to take those out, then that number, the resources number, again, that's companies actually doing things. So this is not listed, is again a very, very high number. So you're basically pushing upwards, really, of almost 50% of your bourse being nothing but resources. So for people who are cynical and say Australia's a houses and holes economy, if you were to look at the market cap of the banks, and again the sheer number of companies listed on the ASX, there is some truism to that statement.
There is, and I've failed in my presenting duties, and it was because I was so excited to get to this and this breakdown. This is because a hot topic here at mining.com.au has been the acquisition or the merger between the Canadian Securities Exchange and the NSX here in Australia, and how this possibly could be a genuine threat to nanocaps. What are your thoughts on this, Dan?
Well, there is precedent. This has happened already in Canada. Canada, of course, is probably the only real other, bourse that's comparable, I suppose, to the ASX and the number of listed mining and resources companies that it has on it. And previously, it was the Toronto Stock Exchange, the CSV, but that's actually changed. There's a lot of companies now offering for like secondary listings and other listings on a smaller bourse, and they've seen a big flow out of companies opting for that option instead. And a lot of it they cite, like the cost, the compliance, the fee structures, the inability to, be seen as anything, but on a very big market. But if they're in a smaller, more niche market, uh, and there's, I suppose when you're a much bigger fish in a smaller pond, it can sometimes provide advantage. So there is precedent here. Whether or not this latest merger can deliver on that promise. Australia is a country that likes to talk about business. We like to talk about, you know, being open for business, but the fact is, we're a land of oligopolies. We do love small, concentrated providers, and a lot of that's just to do with possibly some of our nervousness. But again, it's a country of what 27 million people, predominantly two airlines only. It's three or four major banks which account for the lion's share of home lending in this country. Telecommunications companies are again wedded to one major monopoly. It is a land of an oligopoly. So whether or not there's the appetite there to go to another provider, it does. You also are finding a bit of cultural reticence in seeing new competitors take away market share.
Dan, ask and ye shall deliver. So, at the end of last week's conversation, you mentioned that the trade report was coming out and you were very keen to look for the best, the bold, and the shocker. Tell me, what did you unearth?
Well, I looked at basically those commodities, I suppose, that have kind of starting to really knock the lights out. And Australia's a bit of a strange beast at times, but I wanted to show you three charts that were really interesting. And the first one is the nickel exports chart. So previously in the last, like really for much of the last 10 years, nickel exports out of Australia have been really unloved. In fact, very hard to get a market. That's changed all of a sudden in the last 6 months. Almost $339 million of export. Typically, nickel exports are 14, 13, 15, 16, $17 million per month out of Australia. Lucky to get really to $150 million of annual export. That's changed big time in the last 6 months. We've now 300 and $40 million. That's to the end of April. If it continues on this trajectory, it'll be another $1 billion export in terms of value terms for Australia. So it's incredibly impressive for nickel. So that's the first cab off the rank. Tell me, Shay, do you have any questions on nickel, or would you like me to continue to the next chart?
I think I want to see the next chart. Nickel's not. Look, there are topics on nickel we can discuss, and that is our government keen to prop up a couple of smelters. But I think we should stick to data today and get topical next time. Go to the next one.
The next, take it away, Dan. So the next chart we're looking at is silver, the poor man's gold, and why wouldn't it be off the scale, so to speak? How's this? Silver exports out of Australia last month, $65 million in April. That was the April trade report. In March, 254 million. And I think that might be a record because they are extraordinary numbers. You don't normally see the silver, the value of silver exports going anything really above the $100 million mark. Now, in the last year, it's surpassed $100 million 4 times. So again, if you were to look at the 4 months, so the first third of the year, the value of exports out of Australia, $510 million. So, and if you're looking at the same time in 2024, $33 million.
This is incredible. Do we think that this is connected to the export of non-monetary gold going to COMEX to settle futures contracts? Do we think silver might have been caught up in this, hence the surge in exports?
It tends to get dragged along. I think if we were to go into, so for viewers out there, if you go into the ABS Data Explorer tool, you can actually filter on the US in terms of the value of silver sales to the US. And I'll put a mocker on myself, Shay, to provide that very figure next week. But I think that's what we're seeing is there's this drag through at the moment for precious metals. Silver's a bit different in the sense, yes, it's a poor man's gold, but it has far greater industrial applications than gold. So that, the storage of silver versus the storage of gold's always been the trade-off, hasn't it? But when we're looking at the value of silver exports, this is significant.
Actually, I'm going to put a marker on you. I wonder, is there any way we can find out destination of country where that silver has gone to? Because that could be quite revealing as well. Were people importing it ahead of tariffs for industrial usage?
So, Shay, in terms of country breakdown, the answer is yes. but the answer we're really searching for is the United States being the prime driver behind silver's surge. So the Silver Surfer is alive and well, but that's been quite extraordinary to see that. So if you look at the same period last year, 33 million versus the same period this year, 510 million. That is what we call a big outlier.
Phenomenal, and I'm looking forward to further answers. I can't talk right now, but we've got two more anomalies to investigate today. Here's a metal that hasn't come up on this podcast before: tin, mate. What tin? What's happening with tin?
Well, tin's an interesting one. So I've got tin here, and I just want to give you the overall update on tin. Normally, it doesn't even register. Normally, it's not even a. We're talking 300, 400,000, 500,000, perhaps, occasionally a million. Then, lo and behold, in April, 6 million. So that's the biggest on record. Uh, why is it significant? Well, tin is a metal which is typically, ease of extraction, doesn't generate headlines, but there's clearly something happening in tin because it's becoming far more prevalent as a commodity, and that's now being starting to, show in this trade data. So the fact that tin is now registered, has also been interesting. But whether or not we'll see that again, it's a one-off. Not too sure. But if you were to look at the charting on it, it's fairly static, and this is a gigantic blip, and that's the reason it became interesting because it doesn't normally even register $1 million of export. The fact that it's now registering $6 million, and there is one other record I think of 2 million in the last 6 months. There is something going on there because normally that's quite a strange one to see so early on.
It certainly is. And I look forward to talking about tin because it is a tiny commodity nobody thinks about, but yet it is in every electronic that we touch. So there is no circuitry without tin soldering included on that, and there is no power boards without tin. So it's an incredibly important metal. And I guess we could say that this podcast is brought to you by tin. Finally. Look, we have to keep hammering on about this.
We do.
Because, and this is aluminium. And the reason why we're talking about aluminium is there is a lot of misinformation out there in headlines with the tariffs that the US government are going to apply to aluminium. But our aluminium, I mean, is it really hurting under this potential tariff regime?
No, and I'll tell you why. If we look at the chart now, here it is. It's $1 billion a month export, has been $1 billion a month export for the last 10 consecutive months.
That's huge.
So prior to that, it was 700, 600. The price of aluminum does feed into that. There's no question. But the fact of the matter is this: is that sales continue to remain elevated. Demand remains elevated. 40% of the export destination remains in the Middle East. So these brand new cities, which we talk about the line and all these places that in Qatar and Doha, that this desire to build these cities tends to be an interesting correlation. Of course, aluminium is heavily used, and so in electric vehicle production, and of course the number one, the gorilla in the room where that's concerned is China. So the rise, and this is just aluminium ores. This is the actual, not the refined product, which is probably more sensitive to what goes on in terms of steel tariffs. But again, even that said, Australia's markets are predominantly in the Asia Pacific and indeed the Europe and the Middle Eastern countries. So the steel tariffs, again, it'll be up to political commentators to really make assessments as to whether there's an impact or not. On the numbers alone, you'd have to say it's debatable whether there are major impacts on the raw material of ores, possibly some impacts on the actual refined end product of aluminium, but it's not captured in this chart. The ores chart is just very, very interesting at $1 billion a month.
That's not going away anytime soon by the look of it. Now, Data Dan, you really did hit it out of the park today with these charts. So I ask, what will you deliver for us next week? What have you got your eyes on?
What have I got my eyes on? Silverado. We've actually silver is obviously what we're looking at next week for a breakdown in terms of where it's going. In terms of next week, we're starting now. Shah probably can reveal this, that we're starting to look more at doing our mining newsletter, which is the mining report. That's one to look out for. So that's a newsletter which is very heavy on data, very heavy on what's going on, drill results, who's doing what. So basically a daily snapshot. That's basically in production. So that's been what I've been kind of beavering on for the last few months. And then, but in terms of data coming out, it starts to get a bit lower. But probably be looking at really the big one being the employment report around Australia. So Australia's economic fortunes, still tend to coalesce around, how many people are employed work, but paid work is really dependent upon the success of its most successful industry, that being resources. So with that in mind, that's basically what I'll be looking at with that lens on.
And I am so excited. I've been nagging for months for us to be able to talk about this mining report. Nobody's more excited than me to help get this out there and into inboxes. All right. So the promises that Danny's making to everybody listening is the mining report. We are definitely talking more silver and employment data. Listen, Dan, not only am I going to hold you to that, but I'm going to make a request for employment by sector, because I really want to see what mining and construction are doing.
I can do that. That's in the detailed labour force report. I will provide that as a courtesy.
Yeah. And soon we will start taking requests for what data Dan will be able to provide, but that's yet to come. I can't promise that too soon. Dan, once again, love to push you in front of that bus at the end of a podcast. Thank you so much for being here today. It was an absolute pleasure to talk all things data with you.
Thank you so much, Shay. I don't look forward to doing all those charts.